Then I got a lot of questions about offshore earnings. Right. And the questions on offshore earnings, there were a number of them that I received, but I wanted to try and pick up the main issues that generally. I've just had a comment come through saying that there have been individuals who've applied for tax directives and they didn't need supporting documentations. In which case, then take it and run. But that's the generally your tax directives for things like this is purely for the fixed percentage directives, though, where I was talking where they're looking for the reasonings. It's the why do you need 30% on commissions? Why do you need X for this? Okay. In which case, then that's you're lucky because I've seen it differently. Um, but if that's what they're doing, if you've managed to get yours through, then great. Then maybe they've also changed their mind a little bit. But the formal feedback has been that they'd be looking for a bit more supporting documentation, or they'd be looking for more of a reasoning behind it. Okay. All right. But coming back to offshore earnings. So the offshore earning queries that I'm getting generally come back down to three key questions. First things first is generally it comes back to a question of are you resident or are you non-resident? Right. And I think conceptually this is something which, look, I don't have scope in a 1.5 hour session where I'm dealing with a lot of different queries to go into the full minutia of this. But there are some really good webinar based issues, also, even just interpretation note 3. There's a whole bunch of resources that are available for that distinction or that look into the distinction of whether you're resident or non resident in detail. The main issue that I would have at this point is that we need to be clear as a starting point whether you are dealing with a resident taxpayer or whether you're dealing with a non resident taxpayer. And the reason this becomes so important is because as a non resident, foreign income is irrelevant to me. So if I am working in Kazakhstan or in America or in Australia or wherever, I actually don't care. If you're working somewhere else and you are non resident in South Africa, then that salary has nothing to do with South Africa and doesn't need to be declared here. So it's only if you are a South African resident that you have to declare your worldwide receipts and accruals. Which is why going back to the idea of that distinction of resident versus non-resident becomes so critical, because that really is the key distinguishing item as to whether you declare offshore earnings or not. Because as a non-resident, you don't touch it. It's only as a resident that you have to bring in offshore earnings. And the most common problem and the most common area where I see this going wrong is people who go and work abroad for a period of time, but they actually become non-resident, but for whatever reason, their salary is still being declared in South Africa. Right. So please just be very clear that you need to check very carefully the point at which you become non-resident. Because once you're non-resident, your foreign earnings are, again, I'm talking about from a South African context, then your foreign earnings become entirely irrelevant and you only have to declare your South African source earnings. Right. As a South African resident, if you are earning foreign income, then generally you're going to have to disclose this in a couple of ways. First things first, if you are earning a salary that qualifies as non-resident, then it may come into your tax return automatically because you're getting a payslip from a South African employer in which they would have coded a portion of your income as being non-residents abroad. a non-resident income abroad. Right. So in other words, I'm trying to remember the code offhand. I think it's 3652 or 3651. Right. And also, so in that case, it would pull through automatically. You would have it declared as foreign income because it comes through from on your RP5. And the way the IT12s work in the current iterations, it may change going forward, is that you would then have that pull through and it would automatically pull up the question then, the section 10102 for interest remuneration exemption. Okay, because you've got that linkage to your foreign income pulled in on your RP5. If you don't have that income coming through from a South African RP5, then when you do your wizard, you're going to have to tick the box to basically go and say, did you earn foreign income other than foreign interest and foreign dividends? And you'd have to tick yes, and then it will bring up a whole nother wizard in which you'd then have to start putting in your supporting documentation saying, this was a salary, this was trade, this was business earnings, this was whatever. And it would then pull through in there, and then you would be able to claim your relevant exemption. Please bear in mind that this is generally for someone who's working on a cruise ship, how you would be doing it, because generally you're not being paid by a South African employer, you would be being paid by a foreign employer. So you would have to tick the box to say earned foreign income other than foreign interest and foreign dividends, tick the box, and then you would have to fill it in. Please remember though that you need to be clear about which exemption you claim, because just because I'm working on a cruise ship doesn't mean I qualify for section 10101 rather than 10102. Okay. 10101 is only available to the actual crew of the ship. So we're not talking about, the entertainers or anything else. We are talking about the people who actually physically make the ship run. You're working in the engine room. You are sort of pumping the bilge waters. I don't know. You're actually working on the physical functioning of the ship and its ability to steam through. Right. That's what they mean by looking at crew of a ship. They make it very clear that section 10101 doesn't apply to, the wait staff in the restaurant, to the entertainers, to the people the lifesavers on the pool deck. Those are not part of section 10101. That would only be 10102 if they qualified. Okay. To tie in with that, please remember for 10102, we did have a exception in the 2021 year of assessment, which required that you didn't need to meet the 60 days and the 183 days. It only required 117 days. That was a COVID relief only available for the 2021 year of assessment, not an exemption now. Any more detailed questions on section 10102, I highly recommend these two interpretation notes, which I really think you need to look at. It is interpretation note 16 and interpretation note 18. The one deals with the actual section 10102 exemption, the calculation, the days, the details, and then 18 deals with section 6 quat, which deals with the credits that you can the foreign tax credits that you can claim on offshore earnings. All right. Those go into all the detailed questions, all the detailed answers. Yes. All right. In particular, with the foreign taxes, because that to me is probably the biggest misconception that comes into offshore earnings. And that's why I wanted to address it here is, please, if you are wanting to apply foreign taxes as a credit in your tax return, you are 100% entitled to do that. There's no problem with that whatsoever. The law allows it. 6 quat says so. You can do it. But where people often get it wrong is in the how much you can claim. You need to remember that you can only claim the foreign taxes on the amount included in taxable income. So, to give a very simple example, if you've got someone who earns 2.5 million Rand working offshore, qualifies for the full Section 10102, all those other bits and pieces, then of my 2.5 million, when I do my South African tax return, I would go 2.5 million. 2.5 million gross income less the 1.25 from Section 10102 gives me taxable income of 1.25. If I'm working in a jurisdiction where, say, I've paid 500,000 rands worth of tax on my 2.5 million. So I had to go and pay in whichever jurisdiction I'm working, and I paid 500,000 to that relevant revenue authority. Then when I'm doing my tax return, I can't take the full 500,000 tax that I paid into account for my Section 6 quad credit. Why? Because I only included half of my gross salary into my taxable income. Therefore, I can only take half the rebate into account. So you do not automatically, just because you paid a foreign tax, doesn't automatically mean that you're going to be able to claim the full amount as a 6 quad credit. There's two tests you have to apply. Test one is the amount of the rebate is equal to the amount of foreign tax paid on the amount included in taxable income. That's test one. That's the amount of the rebate. Then there's a second limit, which is housed in Section 6 quad, which says that the amount of the rebate that I claim can never exceed the South African tax payable on the amount included in taxable income. It does get more complex than that. That's why I'm saying please go and have a look at Interpretation Note 18. It's about 80 pages of explanatory goodness about Section 6 quad. Alternatively, there's a lot of varying online resources that deal with this as well. Is something I know which was picked up in the last session that we had as well, where there was a query about whether the IT12 was actually calculating the Section 6 quad correctly. And after having looked at the detail of the question, the error this was definitely one of those scenarios where the tax return was actually completing the credit calculation correctly. Where the misunderstanding had come in is that the practitioner was only applying the limit and not actually calculating the amount based on the tax paid on the amount included in foreign taxable income. Okay. So generally, if you are going over the 1.25 million threshold for your Section 10102, then you can only effectively take your pro rata percentage of what's in excess of your foreign taxes paid. Right. Oh, excuse me. If you are paying if you're looking at things like foreign dividends or your foreign interest, generally where the full amount is taxable, then generally you're going to be able to claim the full amount. Okay. Please remember, if you're looking at what's deductible against your foreign income in terms of what's taxable, no, you can't just deduct. You always have to declare gross and then declare your underlying expenses in the same way that you would declare your gross rental proceeds and then take your deductible expenses underneath. Okay, so that's point one. The other thing, though, is that once you have put your foreign income into your South African tax return, then your South African expenses can be deducted against your foreign income. Right. So, in other words, you can reduce the tax payable on your foreign income with your local expenses. As long as it's deductible, anyway, either in terms of Section 11F, so your retirement fund, your Section 18A donations tax, or any of your 11A type deductions. It has to be legit deductible expenses. Okay. So the normal rules apply. Okay. Right. Yeah, I've just gone and I've kind of skipped ahead a couple of slides, done a bit at once. Please remember that if you have no RP5 and you've gone above, then you just tick the box for the other foreign earnings. I've also given you the link there to how SARS explains the disclosure, their FAQ, as well as the link to the coding that they want to use. And then, as I say, interpretation at 16 gives you the detailed explanation of whether Section 10102 applies to your particular offshore earnings. Okay. Right. Let's have a look at this example. I'll give you a minute to read it. Please note, there's one area of this question which I would say is, I put it in as written because I just wanted to make the point here. This has residency in both SA and UK. I think the important point here is to remember that we need to always be careful when we use the words residency in a tax context, because the question is, do I mean residency in terms of the respective income tax act or the double taxation agreement, or do I mean residency in terms of the citizenship act? Because they're two different things. They're fundamentally different concepts. I'm presuming that in this particular instance, the individual that the what was meant was that the person has indefinite leave to remain or citizenship, or that effectively, so they have a right to be in both countries. Put differently, has a passport for both SA and the UK. That's what I presume the individual meant. But because it's quite important to realize that from an income tax point of view, even though it's possible that I can be tax resident under both South African and UK law, because South Africa, has both, or South Africa and the UK have a double taxation agreement, I would have to apply the DTA, look at the tiebreaker rules, and then sort of throw my hat into one. So even though at first glance I may want to consider myself tax resident in both, because of the DTA between our two countries, I can't. I can only be tax resident in one. The way they're completing this question, or that they're discussing this question, makes me get the impression that they are implying that the individual is South African tax resident, hence they're declaring the full income in South Africa, the worldwide receipts and accruals. Right. So that's the first issue. The question here is effectively looking at the apportionment query that we are getting in terms of interpretation at 16. Right. So there is, and in this context, I would fully agree with the practitioner, Interpretation Note 16 does say very clearly, and actually Section 10102 is very clear on this issue as well, to say that the exemption can only apply to foreign employment income. However, what happens in a lot of cases is that when you're working abroad, that your work abroad and your other employment income are often linked together. So that, for example, take the typical example of an engineer who works on a building project somewhere in Africa and then comes home, then works on a different project, then comes home, works on South African projects, and it's a hodgepodge. So what interpretation at 16 is trying to make clear is to go and say, if you're earning a salary where you're being paid both for work done in South Africa and work done abroad, then you have to apportion effectively your pay that you receive over the work days that you did abroad and the work days that you did in South Africa. However, in this scenario, that's not what I'm doing. Is I've got two fundamentally separate employment contracts, one which purely relates to work done abroad and one which relates purely to work done in South Africa. And in that case, then you wouldn't have to go and do a day's work pro rata, or if you did, you would only look at the 200 days you worked abroad because that's the 200 days you got paid for. The 50 days that I worked to earn the South African commission is separate from my apportionment calculation in terms of interpretation note 16. This has been challenged a few times, and this is the generally accepted view. SARS has also agreed that that is the correct view. The apportionment is only where your salary is for both work done locally and abroad. If you've got a salary which is earned for purely work done abroad, and then a separate income stream which is purely for work done in South Africa, then you don't have to apportion, but you can only exempt the foreign income, the stuff for the income earned for the work done abroad. Okay. What the what I do find in this one, which is what you just have to be aware of in this case, is you have to go and double check that you have proper proof of your proratering. Okay, so in other words, do you have employment contracts which show that you're only being paid for work done abroad? Do you have, I don't know, timesheets? Do you have something which shows that they're separate employers and that you aren't doing work for your UK employer while you're in South Africa and vice versa? Right. Because that's something which SARS would be entitled to ask, is to go and say, right, yes, I realize you've got two separate employers, but please prove to me that you're only working for employer A while you're in the UK and that you aren't doing any UK employer work while you're in South Africa. That's your only real risk. Okay. Tied in with this, because this is a comment which I have seen coming through a few times, is that people have had practical issues with the Section 6 quat on the IT-12. I find generally that where the issues come from is that the declaration, especially for the Section 10102, to be brutally honest, I actually think the form's poorly designed. I'm not even going to debate that, because the form requires you to do it differently dependent on whether it is the foreign income is on your IRP5 or whether it's under other. And that's often where the issues come in. We have submitted a request to SARS that for the current for the new filing season, that they actually put in a simplified return, and as opposed to having like three different spots where you could potentially put this in, that they've got one unified approach for how they're going to ask for that information. Okay, we'll have to wait and see if they bite on that one. Okay, which is also something which, yeah, we'll have to wait and see. Right. Tying into that apportionment idea, please remember that the 183 days, because this I still see coming through, the 183 days, South Africa doesn't have a 183-day residency rule. Right. So please, just because you are out the country for 183 days doesn't mean you are automatically not tax resident. All it means is that you potentially qualify for a Section 10102 exemption.